For decades, silver was treated as just another metal, quietly industrial, largely ignored. But today, the United States has officially changed that perception. In a decisive policy shift, the U.S. government has listed silver as a strategic mineral, placing it alongside resources vital to national security. This decision signals more than bureaucracy. It reflects rising geopolitical tension, fragile supply chains, and silver's growing importance in modern technology. A strategic mineral is a material essential to economic stability, military readiness, and technological leadership, with limited alternatives and high vulnerability to disruption. Historically, strategic minerals included rare earth elements, uranium, lithium, and cobalt. Silver was never considered critical, until now. The reclassification acknowledges silver's unique physical properties, unmatched conductivity, and irreplaceable role across multiple advanced industries. Silver is the most electrically conductive metal known to science, making it foundational to electronics, data centers, semiconductors, and communication infrastructure. Every smartphone, computer, electric vehicle, and satellite relies on silver, often invisibly, embedded deep within critical components. As digitalization accelerates globally, silver demand rises structurally, not cyclically, making shortages increasingly difficult to resolve through price alone. Solar energy depends heavily on silver. Each photovoltaic panel uses silver paste to convert sunlight into usable electricity efficiently. Global climate commitments are transforming silver into a green metal, essential for renewable infrastructure and decarbonization strategies worldwide. The U.S. energy transition alone is projected to consume massive quantities of silver, intensifying competition between industrial use and investment demand. Modern weapons systems, radar technology, missiles, and secure communications rely on silver's conductivity and reliability under extreme conditions. Without guaranteed access to silver, military readiness and technological superiority become vulnerable to foreign supply disruptions. Strategic mineral status enables the U.S. government to prioritize domestic access, stockpiling, and supply chain security. Unlike gold, silver is primarily mined as a byproduct of copper, lead, and zinc mining, limiting supply flexibility during shortages. This structural constraint means silver production cannot easily respond to higher prices, creating long-term supply stress. Major silver-producing nations include Mexico, Peru, and China, increasing geopolitical exposure for U.S. supply chains. The strategic designation did not happen overnight. It reflects years of internal assessments, supply stress signals, and geopolitical recalculations. Rising tensions, trade weaponization, and export controls forced policymakers to reassess vulnerabilities across critical materials. Silver crossed the threshold where economic importance and national security risk became inseparable. Once classified strategic, silver enters a different policy universe, where government intervention, subsidies, and stockpiling reshape market dynamics. This could reduce available supply for open markets while increasing long-term price support mechanisms. For investors, strategic designation historically precedes structural repricing rather than speculative spikes. Gold is a monetary metal. Silver is now officially an industrial security metal, bridging finance, technology, and defense in one material. This dual role gives silver asymmetric importance during periods of technological expansion and geopolitical instability. No other metal combines affordability, conductivity, and strategic relevance at silver's scale. Strategic listing is not the end. It is the beginning of deeper policy alignment between industrial planning, defense readiness, and resource security. Expect increased domestic exploration incentives, recycling programs, and closer monitoring of silver flows. Silver is no longer just a commodity. It is now a pillar of national strategy. When a nation quietly reclassifies a metal, it signals a shift beneath the surface, one that markets often recognize only too late. For centuries, silver was valued as money. Coins, trade, and wealth storage defined its role long before electricity transformed its destiny. The Industrial Revolution quietly shifted silver away from currency toward manufacturing, embedding it into machines, wiring, and emerging electrical systems. By the 20th century, silver's monetary role declined, but its industrial relevance accelerated faster than most policymakers anticipated. Unlike gold, silver was consumed, used, dispersed, unrecovered. Each industrial cycle permanently removed silver from accessible supply. This consumptive nature slowly transformed silver into a strategic vulnerability, though markets continued pricing it like an abundant commodity. Most silver is not mined for silver itself. It emerges as a secondary output from base metal mining operations. This means silver supply depends on demand for entirely different metals, disconnecting price signals from production response. Even if silver prices surge, miners cannot easily increase production without corresponding demand for base metals. Strategic planners recognize this rigidity as dangerous in a world where silver demand is accelerating simultaneously across multiple sectors. Supply constraints are structural, not temporary, and no amount of financial speculation can resolve physical shortages. Modern defense systems demand materials that perform reliably under heat, vibration, radiation, and electromagnetic stress. Silver's conductivity and corrosion resistance make it indispensable in guidance systems, avionics, satellites, and secure communication networks. Unlike commercial electronics, military applications cannot substitute silver without compromising performance or reliability. From fighter jets to missile defense systems, silver quietly underpins technologies that define military superiority. Strategic mineral designation ensures these supply lines remain protected, prioritized, and insulated from geopolitical disruption. The digital economy runs on electricity and data. Silver sits at the intersection of both, embedded throughout digital infrastructure. Artificial intelligence, cloud computing, and high-performance chips all require increasing amounts of precision electrical conductivity. As processing power increases, tolerance for electrical loss shrinks, elevating silver's importance relative to cheaper alternatives. Strategic designation reflects recognition that digital dominance depends on materials science as much as software innovation. Control of strategic materials increasingly defines control of technological leadership. Global supply chains, once optimized for efficiency, are now scrutinized for resilience, redundancy, and political reliability. Silver production is geographically concentrated, exposing importing nations to political instability and trade weaponization. Strategic mineral classification empowers governments to intervene before shortages translate into economic or military vulnerabilities. This move aligns silver policy with broader efforts to secure critical supply chains. In an era of fragmentation, material security becomes national security. Financial markets often focus on short-term price action, overlooking slow-building structural shifts beneath the surface. Silver's price volatility masked its strategic evolution, distracting investors from physical fundamentals. Strategic designation forces a reassessment, reframing silver not as speculation, but as infrastructure. Repricing rarely happens overnight. It unfolds as policy, demand, and scarcity converge. When governments reclassify materials as strategic, investment dynamics shift from free markets toward managed scarcity and long-term demand guarantees. Strategic designation often introduces subsidies, incentives, and stockpiling programs that quietly absorb supply from open markets. This absorption reduces market liquidity, amplifying price sensitivity during periods of demand acceleration or supply disruption. Historical precedent shows strategic materials experience structural repricing rather than short-lived speculative spikes. Investors who understand policy-driven demand shifts often position early, long before headlines capture public attention. Silver's hybrid nature links it to both industrial growth and monetary instability, creating unique performance during inflationary environments. When inflation erodes currency purchasing power, tangible assets with utility gain renewed attention from capital markets. Unlike purely monetary metals, silver benefits when economic expansion and inflation occur simultaneously. Strategic classification reinforces silver's role as a hedge against both supply shocks and monetary debasement. This dual exposure distinguishes silver from most commodities and financial assets. Strategic mineral status allows U.S. agencies to prioritize silver access for critical industries during shortages or emergencies. It also unlocks funding for domestic exploration, refining capacity, and recycling initiatives. This signals a shift away from pure globalization toward selective resource nationalism in critical materials. Silver joins a growing list of materials governed by strategic, rather than purely commercial, logic. Policy stability, not market speculation, becomes the dominant demand driver. U.S. classification rarely occurs in isolation. Other nations closely monitor such decisions for signals of emerging resource priorities. Strategic listing by one major economy often triggers similar reassessments elsewhere. This creates competition for supply, tightening markets even without immediate increases in physical consumption. Silver's transition into strategic relevance may accelerate international stockpiling behavior. Global coordination declines as nations prioritize domestic security over market efficiency. Long-term pricing of strategic materials reflects scarcity, policy protection, and substitution limits rather than short-term trading sentiment. Silver's limited substitutability anchors its value floor higher than historical norms. As demand grows across energy, defense, and technology, structural deficits become increasingly difficult to resolve. Markets may only fully reprice silver once shortages impact visible economic outcomes. By then, strategic positioning may already be complete. The strategic listing of silver marks a quiet turning point, one where policy, technology, and scarcity converge beneath market awareness. History shows that when materials become strategic, their value is rarely questioned again. Silver is no longer waiting for recognition. It has already been classified. Future energy systems demand extreme efficiency. Even minimal electrical losses compound at scale, elevating silver's role inside grids, storage systems, and transmission components. As grids decentralize through renewables, silver usage spreads across millions of connection points rather than centralized power stations. Electric vehicles further intensify this trend, embedding silver across batteries, charging infrastructure, power electronics, and control systems. Each technological layer multiplies demand, even as individual components attempt minor reductions in silver content. Net zero ambitions inadvertently lock silver into long-term structural demand. Recycling is often proposed as a solution, but silver's dispersion across tiny electronic components limits economically recoverable volumes. Unlike aluminum or copper, silver recovery often costs more than newly mined supply at scale. Policy planners understand recycling helps margins, not fundamentals, leaving primary supply constraints unresolved. This reinforces the strategic logic behind protecting access to raw silver sources. Substitution is frequently discussed, yet silver alternatives consistently sacrifice efficiency, durability, or reliability in mission-critical applications. In consumer goods, small compromises may be tolerated. In defense or infrastructure, they are unacceptable. Strategic designation reflects acknowledgement that silver cannot simply be engineered away. Materials science offers optimization, not elimination. Strategic classification enables governments to quietly build inventories without disrupting markets through visible panic buying. These stockpiles act as insurance against geopolitical shocks and industrial disruptions. Over time, this removes physical silver from circulation, tightening supply without immediate price signals. Markets often underestimate slow, deliberate accumulation. Strategic decisions are rarely made at peaks. They emerge when vulnerabilities become undeniable to policymakers. Silver's designation reflects anticipation of future strain, not reaction to crisis. This timing suggests urgency beneath the surface, invisible to short-term market observers. Policy acts first, markets follow later. Silver-producing nations gain leverage as demand becomes strategic rather than discretionary. This may encourage export control, taxation changes, or domestic prioritization. Strategic metals rarely remain freely traded indefinitely under geopolitical pressure. Supply risk increasingly reflects politics, not geology. As global power fragments, control over materials underpins economic sovereignty and technological independence. Silver's role expands beyond markets into strategic leverage. This elevates silver from commodity cycles into long-term national planning frameworks. Its relevance persists regardless of economic cycles. Silver's strategic designation formalizes what technology, energy, and defense trends already implied. This is not a speculative story. It is a structural transformation. When a nation labels a material strategic, it redefines priorities for decades, not quarters. Silver has crossed that threshold. Quietly, deliberately, and decisively, silver has become part of national strategy, long before most realize what that truly means.